this is going to be kind of a long video, so I want to cover a bunch of topics about trading and the kind of person or the kind of personality, if you could build. I heard a guy on a show just say that a lot of these Playboy magazines, the photographers would take parts of different girls and build a composite girl that was just so gorgeous that she didn't exist in the real world. So it's kind of hard to build yourself. If you built a robot that traded a certain style, you still have to trust that robot to turn that robot on. And to know when that robot is going to perform with that rule set. So if you're going to become your own robot, in essence, at least try to get yourself into, and they always say you should be a disciplined trader and all that stuff, because I think what they're saying is you have a rule set that you stick to. So a discipline, it just kind of is about rules, I think, and it's also about structured list of things. Now, when the kind of person you are and you come into trading from another business, say you used to be a hairdresser or whatever you did, and now you go into trading, and some of the problems are that and of course, if you don't have a trading system yet, your personality is going to determine the kind of trading system that you pick. But I think in some cases it may not be the best pick for you. It may be almost be like eating food. Some people will say, "Oh, you know what? We did a blood test on you, and you really should be eating more this." But you say, "I hate the way that tastes," and the problem is that maybe it's good for you. So maybe trading a different style and being a different person and wearing a different hat can make more money for you. Now, I really don't know who. I suppose there are so many different trading styles, and I guess that's why there is all these different flavors. But I think certainly for all the diet books out there, the kind of the basic simple stuff that you hear, stuff like exercise more, eat less. This is always the classic thing, and the trading thing would be classically trade less. In other words, don't overtrade, but take really good setups. The best entries, and some of that is time frame dependent. You can change the time frame to fit your personality, but you're still stuck with the once you get down to smaller time frames, you start to realize that the spread and the commissions are going to be your enemy. So there's definitely as you walk, the further you get away from the market, the broader the swings and the more money there is as far as movement of market. But the other side of the coin is more risk. And so on this, you got this thing here, which is the 4 personality types split, and everybody's a blend of this thing. Nobody's straight out. I would say for the bottom of this thing, the reflective, I think this is how most people are, especially if you're looking at a chart with all your stuff up there. You're reflecting on the market, and people are very much taking into consideration the fundamental news, all these things they hear, and it comes into their mindset. I mean, it really becomes the bias that's created, and on the top there is the kind of things that, not that, ultimately the ultimate trader would just be completely a mechanical system. I guess my point is that, I think mechanical systems, they make more money, but when I say that, I'm really talking about mechanical entry. It's really, you can have an Elliott wave, and you can actually set up a mechanical entry. So it's not really mechanical trading versus, I guess, analyzing and stuff. It would be a blend. Of course, that was always the big drawback, say, from Data from Star Trek. He had an inability to do he went on the holodeck one day, and he was, he's like the update of Spock, and he was in there trying to do comedy, and he just was kind of like, he didn't know what comedy was, but he had the script, and he ran that script, and people were like, of course, I think he had an audience that in the holodeck that could basically laugh, or you could program it to laugh. Of course, you never knew whether you were in the that was actually the original Matrix, right? You don't know if you're on the holodeck or not. Matrix, to me, hated it, didn't get it, too slimy, but to each his own, naturally, of course. But this here influential, compliant, steady, dominant, and the compliant thing, I would say, probably is the ultimate trader here. Calculating, conscientious, careful, cautious, and the bottom right there is obviously stable, supportive, sincere, slow, and actually being slow in the market. And now, if you're a scalper, you're on the top side of this thing. Obviously, you're trading at the market, pull the trigger, boom, 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 boom. In that case, I'm thinking you really have to have hotkey execution in this world. I mean, to really clean up, right? Now, you can actually trade both at the same time. You can have your reflective orders sitting at key support and resistance zones, and you can have I'm trading at the market, right? The best trades are the ones where you've got a pending buy limit, say, or a pending sell limit, and as the market approaches that, when you realize at some point that that target's not going to be met, you can start selling at the market as you approach that. As the session comes to an end and you're running out of momentum into those moves, you get you're done, right? You're out of that thing. You're just like, I'm just going to scalp out, let the other orders that I placed in a reflective mindset, let those things fill, and let it all happen. If you have a pending, and you also have your hand on the trigger, say you split your tickets, so you bought 50K on a pending, and you have 50K sitting as the market's doing its thing, and you're on the 1 minute chart, and you're looking for the ultimate entry. You're scalping, but in the background you've got pendings. So you've got the whole matrix laid out of all of these triggers and all of these claymore mines that you've laid out in an array that is going to fill. I mean, when the market comes in that zone, it's just going to fill. That's all there is to it, because it doesn't have a choice. You've picked these zones. You're totally committed to those executions that are on the bottom side of this personality. Now, so if you can be this, and that was really the ultimate goal. At a THARP, I was in a 3-day thing with Van Tharp in Chicago, and you would basically do exercises like, imagine you're on the ground and you're looking up at yourself about to jump out of an airplane. So being able to see yourself, of course, that was actually kind of a scary thought. So I had to jump back from that. But because you're on the ground and you're looking up at yourself going, hey, wow, that's really high. The next time I was in a plane, I was actually white knuckling it after that, the Sue Tharp for that. But to see, and it's also like seeing yourself outside yourself, looking over your own shoulder and saying, okay, I'm a reflective person, and trying to be both people at the same time. So you're scalping, but you're also holding in the back of your mind, you know what? If you're trading at the market and you're in this so-called sniper mode, you got to be good at that. I mean, you have to be that person, but you don't have to be that good at being that person. You can do it. I think there's baby steps in both directions to get to that goal of like, okay, so you're going to be the sniper, but you're going to have the trigger set on like BB gun style. So you're not dumping a bunch of money into these stupid trades. So you also have to wait. Unfortunately, if you're going to trade on the clock, you have to wait for that time to happen, blah, blah, blah. That is a problem for me because I could see these moves coming, and if the move doesn't play out, this is another thing. If the move doesn't play out, then you have to have a backup plan, because you can make money going the wrong direction. Of course, wrong according to you now, and you're going to make money from being wrong. That's totally in contradiction with what you've been taught your whole life. So that's another reason why you can't make money with your parachutes. Parachute being, in Bill Williams' terms, when the fractal is taken out on the wrong side, you're gonna go the other way. But that's all pre-planned. I don't think you want to make that decision on the fly. I think you want that to be a reflective backup plan that you laid in on key pivot points, expecting, okay, this thing doesn't go up, it's going down, which is dumb. But that's what it is. It's dumb. If it's not going up, it's going down. Well, duh. Or it's going sideways, right? If it goes sideways, then it's going to be a matter of, are your pendings just going to decay over the time because it's not getting to its target on time? And so, I guess accepting of what kind of person you are, and if you're losing trading and you have a kind of a somewhat logical trading system, of course, it could be as dumb as you're either trading on your gut, so you're on the top of this thing, and you're just gut trading this thing, and then the other option is that you're a completely calculating person that only takes the best setups from a long-term standpoint, and so the chart here that I'm running is this is a Wyckoff chart, and well, I guess you know what, let me just make that a different video there. So let me do this, go to this chart here. This is a image from the internet that this is the 1929 crash. I don't exactly know where we are on this chart, but this is probably the most perfect analytical. This is the most gorgeous wave 4 to me. If I zoom out, of course, that doesn't get any better than this. This is like, I think, a daily chart of a stock market, and this still happens on smaller time frames, on 15 minutes, on 1 hour, on 4 hours. You still see these kind of moves a million times. Here's the whole chart, and here's the volume on the bottom. So you can make all sorts of decisions off of this. But my point being is, it's about the entry. How do you get in, and how many orders you place? And I say you place a lot, as many as you can possibly. Once you take an account, once you take 100K and split it into 100 1Ks, you would make so much more percentage money, because now you have complete stop and take profit diversification spread over just a giant range. So even if you're wrong, since you can trade, say, 50K in either direction, or maybe you're trading 20K up, 20K down, but it's not going to matter, because when the news comes out, you're going to make money. When anything happens, you're going to make money, because you've chosen, in a reflective mode, all of these low-risk setups. Now, when the market opens up and things start to come unraveled, and because you have to make a trade plan for up and down. I don't think you just want to trade. I hear people say, I just watched a video where the guy said, "Well, I'm not going to short anything today." And but what if what if that appears, and how would you know if that appeared, and what would you be expecting? And of course, all the pending orders that you commit to, based on your reflective approach, and then you have your, okay, you know what? If they twist my arm, I'll take some trade. Like if they don't get to that key level, you just start getting at the market and just scale into it and just have to wait for time to pass. Now this chart here is just amazing. Somebody really, and I would never have the time to draw all this stuff in here, but somebody really went to town on this puppy. It's just staggeringly amazing. Here's the top that became the bottom, right on the top of the wick. And look at this. I mean, trap, the bears, the whole story. The one thing though is on the entry, and my point being, the mechanical entry applied to a analytical chart like this is the holy grail, in my opinion. Because if you're waiting for a small bar, and this is the thing I'm working on right now, is getting away from closing prices and going to just straight range. Because if I can see the traps, if I can see the ultimate entry, which is the kickback, it's like a Ross hook, if you're familiar with Joe Ross, but I'm actually going to get in while the hook's being hooked. I see so many late entries and so many dumb entries that people that, I mean, ridiculous. I looked up mechanical trading today just to see on the internet, mechanical trading, and I hear stuff that's mind-blowing, right? Like people have a volatility index. Well, mine's going to be just a bar. Just the bar, the range of the bar, the last known bar. Yeah, mechanical entry, because here, for instance, if you were to go short here on a breakout because you think this can continue, you can do it. And you can put more orders in here than you could put more orders in. This is what it's about. It's about how many orders can you put in there. And on this entry here, if you didn't even know, like you're in a downtrend, you have to put a sell stop in here. And you have to put a buy stop in here. You have to. It's absolutely, you have no choice. And this is a mechanical, rule-based, like Zen trading system. You also have a buy limit here. Now you might say, well, make up your mind. You don't have to. If you have tight stops on everything, when you get stopped out at this point and it goes the other way, you just let it go. Now, the analytical part of it is that you have buy stops here, but maybe it's just this much. It's a good trade. Trailing buy stops and trailing sell stops is basically the entry technique. Without going to the smaller time frame here, which would be there's a double bottom inside of every one of these, or a triple bottom inside every one of those. So this could be a 5-minute chart, right? So, but you have to be very quick. On the 5-minute chart, you're probably just going to buy a retest of this. If you do have buy stop stacking up, your first one's triggered here. You're already long. You're just riding with the market. And this is just an amazing chart because you actually have an envelope here. Of course, here it's based on the close, it looks like, and I don't know why the shaded part's here, but sell stops are stacking up. And another thing is the market's already telling you how many orders to put in. This is the beauty of it is, the fact that this market is in a low pip range here, whatever this is, points. This is the 1929 crash, but it's stacking up sell stops, and of course, in the most stupidest terms, without any Fibonacci, this is resistance, this is support. Right? Here is the bounce. It comes back up, but really, if you're gonna trade on the clock, you've got to have this, but maybe not. Sell limits here. And another thing is sell stops here. This is the high risk trade, but this is going to be a bigger reward trade. And all these orders are stacked up on this pivot. You also have the fact that what if this thing goes the other way? So you always have the backup plan running, and you're going to trade a little bit more on this system than you would trade. It's not over trading if you're splitting your ticket into halves, into quarters, into eighths. And the reason why people don't, like, I think that if you're going to do small trades and you do a lot of them, you just have a spectrum, entry and exit, and boom, you're out. As this market's tanking, you have buy stops running here. You never get filled. You never get filled. You get filled here, you get trapped a little bit. You never get filled. You get trapped a little bit. Never get filled. Now you get filled on all these. Now the market's already told you. It's like if I told you once, I told you 100 times. You have a buy stop here. You're long. Unfortunately, you have to take this much risk. You're getting in right here, right on the turn. Now you're picked up in the stream. And for every one of these bars, you're going to be long 1, 2, 3, 4, 5, 6, 7. You are so long this thing. You know your exit door is here. Duh, right? But look how they break out that one last, and this is every market you're ever, these markets have changed. No, they haven't. Another myth, but don't get, I don't want to get angry here. I just want to do this how to get in these markets. Now, you're taking profits. You have to be taking profits here. And maybe you got sell limits up here because you got this beautiful, bottom in here. Plus, you're just up near the top. Forget that. That's what I'm going to do on the next thing here. I'm just going to go without the closing prices. I'll show you how you can do it without the closing prices, which is actually better because I've been distracted by these closing prices. It's too much of a story. It's too much Elliott wave. At some point, this is why people would play the blues or something. They would just say, you know what? Just going to be 3 chords because I'm going to tell a story. And the story is going to be like every other story I've ever told. There's going to be an intro. There's going to be the plot. And there's the punchline. Or there's the moral of the story, right? Everybody loves a story. And like, why did the market do that? Now, this is all these issues of people wanting to find a reason why stuff happens. Well, it's a structural issue, right? Why does a ball go down through the floor? And of course, gravity, not all markets are going. Some are going up. Like if you're in a glider, apparently if you're in a glider, you can actually go up. You can actually get quite a bit of, because there's an updraft, right? There's always an updraft if you know how to bank into it. And here, that would mean you change a different currency pair, right? You go to the other currency. Like, say you wanted just the markets to go up. You're going to trade the dollar against the yen, or the dollar against, the dollar against the yen, or the dollar against the euro. You're looking for whatever's going up, right? If you're that, you're scanning for things that are setting up for a rally. Even if it's only a few pips, right? You can just see that, oh, you know what? That's done. It's done going that way. In the long run, it may be going down. But if you're just always thinking in terms of like, I just want to be on this, right? And maybe run a trailing stop, right? You get stopped out here. Now you're short, right? You got to take profits here. Last known. You're stuck. You have to do what the market's telling you to do. It's so terrible, especially if you're this person, right? This is where I'm trying to correlate these things, is that if you're the dominant person and you're this guy at the top here, right? You're the doer, come on, like, right? I mean, you're impatient, you're like, come on. And, this is the thing. And so it's kind of like the turtle and the hare, not to say, well, that you can't be. There's sometimes when if you have the trigger ready, right? Say you've got the hotkey ready, or you've decided up in advance, if I see this thing spike down, I'm definitely getting in. Now that's one of these things that's easier said than done. You can tell yourself you're going to do that, but if you place the order in there, you've committed to it. Now this is about another thing I used to have a problem with when I started trading was commitments, because apparently I could not commit to anything because I think I was already committed when I was young, so I don't want to recommit. And I don't think it's so a lot of these obstacles psychologically, and people say I can't trade the way you trade, like that's crazy. It may look crazy, but if you're in super small, it's basically a way to train yourself to, you know what, that's acceptable. And last Friday, the market did not do what I was thinking it was going to do. This is why I'm really going to a mechanical system. I really thought the market, the Eurodollar, was going to retrace some more, and it made a couple of attempts, but I noticed that looking back that just hitting the round handle was enough, and we tagged off. We kept ricocheting off the round handle, realizing that that is the inventory, that is the sweet spot, and people are going to get in there, right? They're going to get in at that price. Now, so this whole thing is just interesting to me, that the way the market behaves, and so the Wyckoff charts, and that was a Wyckoff marked off chart, but the same thing holds true when on all these things structurally, but in the end, you can be a Zen trader. I'm going to go to a chart of the Eurodollar here. Now, what I was expecting was going to happen here, and the Euro was, and on the 4-hour chart was, since I could see the closing prices, and I've stripped that all off because I'm going to be trading mechanical next week, purely mechanical, and if I want to get in on closing prices, I'm just going to go to the 5-minute chart. So, for instance, anyways, this is what I thought was going to happen. What I thought was going to happen was, only because I'm too optimistic and I'm too bullish of a person, that I find it very difficult to sell the market. So I found a workaround, and that is just to go to pure mechanical trading, because I want to just get picked up in the prices. I don't want to have to look at this story and hear about the story. I just want to see money in my account. I don't care how I get there, and I'm not afraid of random rewards. I mean, I really wouldn't want to buy lottery tickets just because I can't really do an Elliott wave on the when I first looked at lottery tickets, this is probably 25 years ago, thinking, well, maybe because I just had a 286 computer, and I thought maybe I can crunch, get like a lottery bot, and it didn't quite work out, and then I got lost in the fact that, well, I mean, obviously the only way to win at lottery is to let the robot pick, right? Because the robot's picking, just go for randoms. But some people play their birthday over and over again. It's funny how that is, and that makes money too. Supposedly, the scratch and win works too, I think, typically. But no, in trading, you want to really know, well, what happened, why, and all that stuff. And really, this trade, had I taken the failure of this pattern, and of course, for the biased trader, that is the death. And this is why discretionary trading and why mechanical trading overall wins. Sure, you can do some, you can say this and that, but in the end, it's about, did the market keep going in a direction? And if you place all these orders to go with the flow, then you're basically saying that you're not going to try to fight it and be dominant. You're just going to go into the mode of being passive and rich. Rich people don't force a market. They don't, like, if you're investing in real estate right now, which is probably the only place to really put your money, because if they ever do raise interest rates, just like people are typical behavior, they'll just run to they'll chase the mortgage market, right? And they'll eventually get don't forget, if you get a 20% mortgage, you can write that 20% off on your taxes. So we're going to go back into the other cycle. The world's not coming to an end. Sorry for all the gold. And gold looks like it's on its way to 800 possibly. So it's going to be the same cyclical rotation. I have not heard the phrase sector rotation in probably 15 years. I mean, I was into it when I was doing stocks because I could just see there was REITs, there was this, there was utilities. I mean, these sector rotations are obviously what the big boys, and the funny thing the big boys do. The big boys are on the 4-hour chart. Yeah, the big boys are on these charts because guess what, people? When this thing gets... Now, this is the 4-hour chart of the euro dollar, and just going to run... I guess I got a little tangential there, but I'm just going to kind of just run through anything here that may be useful down the road to somebody, in case they stumble across my rant. But, this is just to, for the first-time viewer, this is 50 pips here on the, and if you're the first-time viewer, I'm sorry to hear that. This is just 50 pips. Psychologically, this is 100 pip. So, without the story of the closing prices, and of course, this is a stripping down into more simplicity, and I'm trying to get down to the most crude system because the market's very crude. The market's very I used to take it personally when the market went against me because I had taken an opinion, I'd taken a bias, and I just found that to be the most kind of ego-robbing and financially disastrous approach to trading. It's mechanical trading. I'm telling you, that's it. That's all there is. And it's a heartbreaker, certainly to the romantics, because they have these glorious projections that gold's going to 5,000 and they're going to be right, and everybody's going to put... I don't even know, but I'm sure that part of people do want to be considered to be not a complete idiot, right? So they want to have this kind of... you made the call, right? There used to be this thing where you make the call, kind of a joke. But yeah, you're making a call, and the thing is that this is like betting on horses. This is gambling. But if you go with what the market is doing and you become the market's kind of prison cellmate where you're willing to do anything just so you don't get beat up the next time. Now, this is not a stance that a lot of men want to take, right? So this is why it's very difficult for men to make money trading. This is why they hired the sociopath. This is why the brokerage firms seek out the kind of heartless person. Why these bankers commit suicide and jump off these buildings you hear about, because they're picking people that are just nothing but pure money machines, and they're ruthless. Now, if you have any kind of heart, it can be a little difficult trading, because if you take a position, you do all your analyzation, which you consider to be all hard work. A friend of mine was trading demo accounts, and he drank a lot of tequila. I don't know if that was a problem, but he would say, he would just totally get a rush when he was right and made money. And then when, so everybody has this drama they're playing out against the market. So if you're a person that's a take charge person, you can really get your head handed to you in these markets because you feel you've done all your homework, And what my buddy said when he lost, he said, "Yeah, but I put so much work into that trade." He looked at it like he has built a house and a storm hit his house. So, whatever direction you were in on all this data here, and if this sideways action was disturbing to you because you were a trend trader and you were looking for completion of this, you're totally in trouble. And I think that all the entries here, it's painfully obvious in hindsight, and it's going to be very painfully obvious in foresight as you come into the... Of course, we could actually gap open, considering what happened in Paris, you could actually end up down below. This market's capable of gap opening at 106. The big round down here is 106. This is 107. And we've been ricocheting off these round handles. And but the reason why I took the closing price off of here, which I'm just really funny that I would decide to do that after I was so hell-bent on them. Not that I can't look at it, but I tell you, I don't want to see that when I'm making a reflective decision. Maybe when the market's open, if I wanted to rhythm trade this thing. Now, that is the thing. The top side of this psychological chart with the dominant active person, as opposed to reflective entry, my reflective entry is totally, and on the weekends, you're in reflection mode, so you're pretty much designing your trade plans. I got to figure that you're just going to buy here. Now, this is going to seem like the dumbest thing in the world. It's not a fib handle. It's not anything like that. But you're also going to buy here. You're also going to buy all in here. And it's just tiny orders, right? And the exit's going to have to be, since I don't have the closing prices, it's just going to be the last known low. So if I'm going to buy here, I'm going to get out there. And if I buy this, they're going to grab these stops, then I'm looking for an exit, say, up here even. But I'll get out as we go up. I'll be getting out. As this broke here on the 4-hour into the close, you could have gone long there with the stop here. Now, of course, holding over the weekend, not the best thing in the world. Okay, so I guess I totally lost the topic there. The whole point of this chart was that I assumed on and assumed and actually had to get an idea of what I think was going to happen. So everybody has a bias, I suppose. I'm trying to de-bias myself because it's just not working. I'm not able to sell, which has always been my biggest problem. That's why I would trade the other currency pair, just because I like to see stuff go up. And maybe because I used to trade stocks, so I love to see stuff go up. And so it's been a real problem. And there's such a pile of money here in both directions. And of course, you have to switch time frames at this point on this 4-hour because it's too. In other words, you don't need to get out your vol to ATR. You can just tell lately we've been in a 100 pip range. And this is last week. So we started off last week. Okay, so here was the trade. We were going up here. I was going to pull back. We were going to come to here. This is my target. Now, my stops got hit, but I didn't go short. Now, in the way that Bill Williams would trade this fractally, and of course his fractal is going to be this fractal, but that's not my fractal here. My fractal is just literally that bottom. Sell stop, and as soon as, and actually you could have this sell stop could have a stop here, stops. It has a bunch of stops. You could not trade this with one position. I'm so sorry. That's another thing. This would never work if you just, and actually this is telling you how many stops to put in, how many sell stops. Here you'd have 1, 2, 3, 4, 5. Every 4 hours, you just keep stacking these puppies up. And after this first fill, you can't put a sell stop here now. If you didn't put these in, you missed it. This one could still be in, maybe. And as this thing's coming up, you would say, I'll sell limit here. But you never got filled on those sell limits. Or you have the buy stop here. Or you have a sell limit. This is the other thing. Okay, so this is the only other rule in this system. It's very simple. This is 100 pips, and these are 10 pip guys. That's the 50. You're going to have to break out. You have to write a script that risks, maybe your max risk is 50 pips. I wouldn't go more than 50. Now, I was looking at these Stapleton guys. This Akel Stokes presented his spreadsheet on the market, and I saw a loss in there of 270 pips. Now, I don't know if that was, I think that was one, I think they might have put a stop of, I just can't imagine somebody putting a 200 pip stop on an order. Like, you seriously couldn't tighten that puppy up? I mean, don't you want to be stopped out of, and maybe it was total loss of pips. I don't even know, because their unit size, to me, was set to 2 and 3. It should be set to 0.01. I don't get why you can't manage. You got all day, right? But maybe, it takes a lot to build those sets. And maybe they're building their own sets there. They got a lot of money in cameras. Stapleton must have 50 grand into that studio. Of course, I haven't checked into video cameras lately, and I'm probably not going to appear on one anytime soon because I'm not that guy. But here is, from a mechanical standpoint, is it just me, or when the market is below 50 pip range, you're going to put in the 50 pip stoppers to make the 100. This would be a quick and dirty filter. As you come into a 25 pip bar, you can put in the buy stops with the 25 stop below. Actually, you have a stop here. You don't just put, and this is, I don't understand why people are presenting the market this way, where they say stuff like, okay, well, the market's going to tell you, oh, you have a sell stop here. And as soon as I'm filled here, of course, hopefully you have the brains to bracket this with your protection, right? And as soon as you get filled, you're going to tighten it up to here. And then you can run a trailing stop, right? And you're on that trailing stop and you get stopped out. You just made all these pips. The idea that you're going to move your stop to break even and see what happens, are you out of your mind? There's a guy who commented on my video about this British pound trade he was in. And he said, yeah, I'm on the channel. I go, yeah, but it touched the bottom of the channel. Even for the guy that draws his stuff on the, let me just go to that chart. Let me torture your brain by going tangential here. But I'm going to go to the chart of the British pound here. So here was the trade he was in, right? He was channel trading this puppy, and I can't remember what time frame. I guess the 4-hour channel. Hell, I don't even know. I'm gonna assume this is the channel he was talking about. He said he was a long-term trader. He's in a channel, so let me see if I can whip up what I think he was thinking as far as this is going down, right? So he was, I get what these people are saying, but we all have to face the fact that when we're in a time frame and the market is moving in a particular direction, that when the ride's over, the train may be going all the way there, and we might actually go there all the way there at some point, but we have to stop along the way to get a little bit, pick up some fuel. So there may be a backtrack, or the rail company goes on strike, which you do see that sometimes. So if you're just looking, you're going to project into the future. This is where the predictions come in and blah, blah, blah. This is the channel he must have been thinking about, right? And, good trade, right? He got in up here. He moved his stop to break even. But when you touch the other side of the channel here, a part of you has to say something like, hello, you just made this much money. And then another thing I asked him about, is he concerned about, and this is a 100 pip grid, by the way. So he's up, he got in here, which is where you should get in at resistance. So he got in here. He's up 200, 300, 400. At this point here, he says, well, I'm a long-term guy, my target is, and he told me his target, which kind of blew my brains out, but I get where these people are coming from with their analyzations of, maybe he's like, in other words, all right, we right, this is possible, right? And we all have these, we've all seen people speculate on how we get there, right? And it could totally happen. My only question is that after a move like this, aren't you just thinking, wow, maybe we are going all the way up? How about a dump here, a reload here? Oops, that didn't work out. And this is why the mechanical trading is, you just go with this. Now, if you would have, or you're getting on these risky fractals here, right, where you're risking this whole thing. No, just get into the crotch right here. As you go, it doesn't make a higher high to here. And this guy should have had a trailing stop. If he's a break even, in other words, he moved his stop to break even after he got in here, and he let all this money sit on the table. I don't know if he trailed the stop because he didn't say anything after I asked him, aren't you concerned about the bear trap here? Trap him, rape him, back up into here. Got to get out. Maybe we are going to walk down. So in the end, he could be right. And I saw another thing. This Greg Marino guy cracking me up with his chart about, it's going to go up here. It's going to go. See how that works? I'm like, you know what? That Dow went all the way back up. Auction theory clipped everybody's brains out. These markets are notorious for that. And if you don't have a backup plan for that, you have to have so many backup plans, man. You have to treat like you're like your own CIA company, right? You're your own NSA. Of course, those people don't have backups. Like hell, sites. Websites don't have backups. They don't have mirrored sites to dump to. Their site goes down, it goes down. There's not like some. But you have to trade like that. Unfortunately, you have to have all these backups. But yeah, the guy could have, maybe he did get out here. Maybe he just faced the fact that, wow. But see, if he's still short from here, this is where psychology can become a problem, because we may walk right through here and just come, who knows what's going to happen. This is a 4-hour chart, but that's 100 pips, and here's the top became bottom, right, blah, blah. Here's was supposed to be support, didn't serve, boom. Okay, so, and now I have this real quick and dirty way to trade now. I'm just trying to always refine this stuff, and I'm going to do some more tangentialness here. So I'm on the internet after this Paris thing that pretty much upset the hell out of me, just from the sheer... I can't believe it. Like, really? This is like you're standing in a room with gasoline and the guy's about to light a match and you're like, yeah, it's all right because I have fire insurance. No, it's not all right. So this thing here, so I went on Churchill, Winston Churchill, who's British, and the whole thing's a European issue here. And this guy, I don't know if we have any leaders in the States like that, but this Churchill guy, wow, he really lays it out. Got some great quotes here, and I'm applying some of the stuff to the market because I find it to be very warriorish, this kind of warrior mentality, and at least a new way to, and of course I'm going to go with some of these quotes here, and the reason why I'm going to this mechanical trading system because it's just less work. I'm so over it. I don't want to sit there and think about 5 mooshes and a cloud and all that stuff. Here is the thing that made me shift is this is a Winston Churchill, quote, to improve is to change, so to be perfect is to change often. Now, that may be tough for the inflexible, rigid person that's like, no, I'm sticking with the program and we're going to trade our system and this is a traditional system and I don't want to hear any stuff from the peanut gallery, blah, blah, blah. Like Stapleton just did a video where he said, what is this market, bullish or bearish? And then he said, don't get smart with me. And I thought, man, I'll tell you what, it looked like a bullish chart to me. It was the British pound. It was recently bearish, but the whole chart in context, there was not a lower low that took out the left side of the chart. So I'm sorry, Jason, and you got your head up your ass on that. I mean, if you're gonna kind of browbeat people, ask them point blank. And if anybody, of course, I don't have a lot of people miss my stuff. I'm sure I've said some wrong stuff, but of course, I'm waiting for somebody to call me out so I can say, oh yeah, I guess so. And you really have to see both sides of the coin here, and you also have to see what the dumb people are doing. The Stapletons of the world, not these dumb. He's got issues. Another one, he's not a sociopath, right? Difficult for them to make money. To think just complete raw. I think raw. No, he's always got to break out the Gartley because that is the artistic, expressionistic. He's a doer. He is a dominant guy. He's that. But wow, for trading, it's just really missing out. He's missing out on a lot of money. I'm just saying. And so I'm always trying to dial this crap in, get this stuff mechanicalized, and actually with the automated executions, some of the pending orders evaporating over time, and just these single drop orders that are guaranteed not to crash the platform is really the holy grail of entry. A little more work than just hitting a button and trading at the market. But trading at the market is total sniperville. You have to be a certain kind of, it's a skill set. You have to be a certain kind of person for that. And it may be if the heat's too much, then just lower the trigger size and trade BB guns until you go to the next level. And here is, it is a mistake to try to look too far ahead. The chain of destiny can only be grasped one link at a time. And that's why I'm trading bar to bar. I'm trading price range to price range. As this volatility starts to scrunch up and we get into a 10 pip window or a 50 pip window, whatever you can tolerate heat-wise, and for some people, winning and losing is about pips. It's not about money. If you have a pip calculator, you just plug in bigger numbers and you come up with bigger percentages. You get a better outcome. Your trades look amazing. People are hiring you. You want to work for our firm? Oh, man, look at your track record. Now, this is another thing. I think we all know how to make a pile of money trading, but there's also a risk to having a bunch of money. Don't forget, it becomes Akel Stokes, who works for this empowered trading thing, will tell you, I have people throwing money at me all the time. Now that's a problem because he said that in this one he did a chat where he talked to traders and he was being himself. He wasn't being in performance mode and doing the trading show. And he said, people throw money at him, and people said to him, he got an offer to have something. Oh, it was an offer to, put out a newsletter, do something. And he wanted, some brokerage firm or somebody was throwing money at him. He said, God, I don't know if that was moral to take the money and say, okay, I'll do that for that. And so these guys are making money hand over fist. I'm just saying that for people that want to make money, and also he just did a video just recently where this kid writes in, so cute. The kid was under age to trade, I think. So he said, hey, can I become a multimillionaire? Which is kind of funny that people want to become multimillionaires, like that's going to make them happy. So cute. But he said, Alex said, well, if you want to make a living trading, you need $200,000. Well, this is the old joke about how do you make $1 million trading? Start with $2 million, right? The idea that you have $200,000, how stupid is that? right? If you have any access to trading at high leverage, you're certainly going to start with $100. I don't care who you are, because it's real money. Maybe you start with 50, maybe you start with 1,000, but the idea that you're going to crank into this thing because you got to have enough, and the losses they're taking. I mean, I got to put their sheet up there. I mean, it's disgraceful, right? I mean, for people that but they don't have the time, right? They're doing a show. But I wouldn't show that. I thought it was maybe a demo account, but they made money overall, right? If you're up 50%, man, but these markets allow you to be up percentage-wise, mind-blowing. Okay, so one link at a time, and this is what I'm focusing on. And this last quote here is, out of intense complexities, intense simplicities emerge. So this is what's happened to me. You know, every time I'm just kind of peeling back all the layers of garbage that I've been taught. And of course, the things that you're taught, and I'm not a sociopath in case you're wondering, but this is why it's a hindrance for me to short the market, because I guess I don't have that pessimistic view. You know, bad stuff's happening and good stuff's happening. So and it's kind of sad to say that you know, there are they're coexisting. So life's totally bittersweet. You know, there's children being born right now, and maybe the next you know, Steve Jobs, these people that come out of the woodwork because of just the sheer fact that they've been on their own path, and they didn't join the crowd, right? So you know, crowd thinking. Now, you can also okay, so when the market's going down, right, and if you're not on that train and you're not making money, and people say, well, if you're contrarian, you know, this thing's going to reverse, and that is how people that buy into a sell-off, in other words, just in the sheer sake of kind of dominant trading style, if you just say, we're going up, and as this comes down, you go, F them, I'm buying more. Then you're like, see? And this is another reason why I said, I think in the other video was, you know what? If you think it's going up, and you bought here, and now you're down, don't add to a losing trade. If you got some dry powder, and you really think it's going up there, maybe you're going to add on stops now. Maybe you're going to change your entry style just because you don't want to overload that wagon. And maybe you sit tight. But when you see this, and you have the chance to put in a tight order, hey, maybe you pick a few up here, and maybe you bail here. So when you're getting in, you know, when you're trading without stops, and the account's the stops, say you got $100 in this account, and you're down, you got $50 left, you just load up here, because you see the double top you didn't wait for. You see that you got in here, and that's why, and this is a 4-hour chart, mind you, you have sell stops stacking up here. You may be long, but you got to go the other way too. To be bidirectional. And another thing is, I looked up bidirectional trading. What did I come up with? Option trading. Well, if you can trade where they still allow you to hedge, it's kind of funny from all the conspiratorial stuff I see. Of course, maybe I haven't checked this topic, but you'll hear people rant about, oh, it's rigged. Well, you know what's rigged is the fact that you can't hedge anymore. Yeah, that it's called Frank Dodd or Dodd-Frank. That's the rig, right? They re-rigged it. But for the people that can find hedging and none of this first in, first out garbage, this basically complete disaster. And as you drill down here fractally, look at the entries here, just in a pure mechanical system, and this is I'm coming back to this this concept. I just want to stick with this, really, is my trading system. The other stuff has to do with kind of like the philosophy of trading, and this too. But this is, in essence, mechanical trading, because you're just like, you only know the last chain, the last link, and the last link is already been established. So here we have a small bar. I don't know if this finished off. Of course, the spread's psychotic here on the close, and if you're high risk, if you want to take more risk, you put a sell stop here and a buy stop there, walk away. But that's not your only trade. Maybe you sell here at the market with a stop up there, but you also have to take the other side of this position. You have to have the buy limit down here for the retest, and all this stuff is laid out. But the order is going to look a particular way, and I set up the fib tool here. Hopefully it's set to the I don't know what this ratio here is. Probably double your money or triple your money. Let's see, you're risking about this to make that. So here's your stop, here's your entry, and as you take this gauge, you're going to write scripts that basically look like this. As the market's coming down, here's your buy stop, here's your trade plan, and this is always your trade plan. Hard stop. I watched another video where the guy said, you can't pick the stop. These one position traders are saying the dumbest stuff you ever heard, like, oh, you gotta let the market tell you where to put your stop. No, you don't, because you're gonna have like a stop here, and you have the market tells you where to put it, and then you're gonna have where you're like, okay, I'm gonna put in a stop here. Your ratios stay the same. You're getting in off of that pivot with multiple orders. You've got orders like this. You placed them all. Yeah. That's the work. Now, I understand people don't want to work that hard because they just want to have an EA do it. Look at this entry here. This is your buy stop entry thing. They also have the sell stop running at the same time. These are all running at the same time. So as you get filled and trapped, and they trap you, it's all right. Go the other way. Now this is designed for this much. Now you can calibrate these orders and only drop the risk 10 to make 20, risk 25. This is risk like 20 to make, this looks like a risk, 15 to make 50 here. You're getting in here, there's the round handle. You're constantly running this crap. And the other thing is that go for the time frame, right? Go for the, in this market here, you're also trading the resistance. You're taking all the losses up front here on this system, and it's going to look like this. You're going to put in the, you break out your risk tool, and that's, like I said, it's the only thing these Stapleton guy has that's worth anything. And this is his risk tool. And so if you're going to be a seller, it's going to look like that, and you're just going to either manually put orders in there, but it's obviously you're going to put a sell limit here. And so you might say, well, yeah, but like, hey man, you got stopped out. Of course, because I've got another order just like that that sells here, and you got stopped out. Got another one that sells here. You didn't get stopped out. Also got an order, since this is a critical zone, I'm going to have multiple trade plans. I also have a sell limit here to take this much. Now, if this ratio stays locked, if this ratio of this one script or this one trade plan stays locked at that ratio, you can drag it around and see how you would have had to get into this thing. Now, the other thing is that you could have that same order. Okay, so you have this order, you got stopped out. This one you didn't. This one you didn't. These two just canceled out that loss. So what it entails is the reflective view of order placement. So right now on the buy side, obviously it looks like this. Buy limits there with stops, buy limits here with stops. you have a buy limit here with a wider stop to make wider amount of money. You can keep a static ratio, and here you would have filled on a buy limit. There's your exit, target met. Here, and here's another thing is that if you're a pattern trader, or say this is a buy stop running, so you always have orders working. You got to have your money working for you. If this is your entry, this line right here, as this is coming down, these are buy stops. They never get filled, never get filled, never get filled. Okay, you got filled and you got stopped out if you're running right up against that, right? So at the same time you've got this order in, you have a call to place an order on the so here's your trap, right? You're losing on that trade. You also have a low risk southern trade, and it looks like this because you have a double bottom. You're in on that fractal, just on the sheer shelf. I mean, Joe Ross's books, you talk about ledges. That's a lower ledge, and you know what? This may be in your stochastics is oversold here, and your view of the market is you built a channel like this. You're going up, right? You could come down here. You can make a lot of mistakes about the maybe this is the middle of your pitchfork. For whatever reason, MACD's oversold, and you're going to get picked up, and maybe your buy stop is way up here, so you never get filled. Of course, this is the low risk entry. These flags and these triangles. Anytime market goes sideways, it's a flag, right? Like here's a flag. So in a cascading market, just putting these stupid orders in, it's so stupid. This is a small bar. You have a sell stop in there. You also have a buy stop to go the other way. You also have when you get filled on this, you got to stop here, got to stop here, got to stop here. But see how that ratio, and as you expand this out, you could just pick a fib number, right? I mean, this is another reason why. Okay, I don't know if I warned you. I was just going to go on forever here, but as you're looking at these kind of moves here, Fibonacci nonsense. You say you're going to do Fibonacci. And that's going to be your order trade. Like, say this is 0, this is 62, this is 1.68. Whatever that is. That's going to be how you get in these things and how you get out of these things. And for instance, it's coming down. Okay, this is what I was talking about. You go the other way, right? So you make money on the downside. You also, the whole time you're making money on the downside, you have a stop and reverse order riding above. You don't get filled till here. Actually, you don't get filled till here. If it's decaying every 4 hours. When you get filled here, oh my God. So you could have you can either have a robot placing buy stops, say 10 pips above, and as the market's going down, or you're just hitting a button. It's better to have it contour. So, and also the market is telling you how many orders to buy. It's just told you. Now, the longer your orders exist, the more risk you take, but the more possible rewards. Always, of course, right? The longer you can sit through this kind of garbage because you know this is coming. But the nice thing about this system is that, say this buy stop still exists, and that's, well, this is a half-hour chart. So at the end of the day, this is unfortunately going to be your trap. But this is a half-hour chart. So this is a pretty active trading system. Buy stops, and they last, say, an hour. But for every one of these, you have say you've got buy stop here. It still exists, and 2 hours later, you still got this cluster and that wedge. Not only did you make money on that breakout, but you're picking up more orders here. Boom. Right now, there have to be scalps, and there has to be scalps built in. That's why this ratio has to constantly be like a fixed ratio, but many orders at different fixed pip risk. ratio is the same, pip risk fluctuates. And when we retest here, the breakout point, we come back to the scene of the crime. These are too big of bars to put in buy stops. You're only running limits now. You can also have a buy limit down here because in other words, you can't trade with the in other words, it's just going to be natural that when they're small, you can have stops and limits. When these bars get big, you can really only trade from the limit side because the rules tell you once you get over a certain big bar, if you have a 30 pip bar and you don't have a script with a 30 pip stop, you shouldn't trade it, really. I mean, you're not going to make more money from a breakout, from a quiet, like you don't have to. This is the 30-minute chart. When you see a small bar, there's either a flag or a triangle in there. There's no other choice. It's also a doji straight out. This makes trading simple. This is a doji. It's small. It's indecisive. I don't need to see the body and the wick. It's complete garbage. It's not mechanical trading. It's biased trading. Now, you could have a bias on this chart that the market's going up. You could also have a bias that the market's going down. Because how much money did the guy that put a sell limit up in here, how did he do? He put a sell limit here because he knew that they wanted that stop. He also had a sell limit up here. Sell limit, never got filled. Got filled here. And if you had a sell limit at this and your stop is here, that's a pretty good trade. But you also have a sell limit here and here and here and here. So splitting your ticket, let the market, in the same thing, all these trades. And this is a half-hour chart, so you got to be a little quick on the draw here. I mean, your active day trading buy stops are filling up as you come down here. Boom. You just scalp to here at least. And you could add sell limits up there for the pullback. You probably got a little stopped. You can trade both directions this way. Now, the euro dollar, what I did here was I have triple screens, so the fractals here, if you don't want to trade the inside crotch of this thing on the 1 hour, so you have buy stops here. This is and here's another a myth that I just want to go after here is this whole thing about, I talked to this one trader one day and he said, it's the end of the day and, they close the session over there in Europe and the market's not going to do any more stuff today. And so we've had 3 days in a row where after the U.S. session, we go up. After this, in the middle of the day here, go up. Here, go up. So, this market and look at this. Are you kidding me? If you got in on a buy stop on this fractal, this is the 30-minute euro dollar, and really this works better on the euro dollar than it does on the British pound. British pound, Canadian dollar, all that stuff are typically limit trade orders because the market is so bombastic that it's really about them hunting people's, there's a bunch of retail stops out there, whatever. People know if they bid it down and they stop somebody out and then they rip it the other way, or they trap a bull or they trap a bear. That's how they make money, right? Nobody makes money, trend trading this thing, okay, right? Like this was my trade on, and this is why I'm going to the stop entry system because my revelation on Friday was that I made quite a bit of money on this strategy. So as the market's tanking, I wasn't going to buy on this tank. I was already long because I was still expecting my target to play out. After we failed here, I thought, well, we're going to come back and play this out. And so I just kept putting on buy stops. And I finally got filled, and this is when the news came out. I noticed them pulling it back to the 50-yard line. The news came out, the jobs report, boom. Wow. You could have sell limits at the 100. This is about a 18 pip bar here. You could add sell stops or you got filled on limits here. Amazing trap. Boom. Then again. Wow. It was insane. It was whiplash bash. And here we finally quieted down. Buy stops are stacking up. You're getting into a 10 pip range. Wow. You can really start launching these. And this is the most amount of money I think that you can ever make in a short period of time is when the market quiets down. You just got filled on your first buy stop. You never got stopped out. Second fill, 1, 2, 3. 3 is the biggest wave. Elliott wave, you're in. Bomb, gone. Came back to here. And look at this thing. In the last half hour, this thing went up 20 pips on close. Same thing. I mean, just ridiculous. So this whole thing about, it's the trading day is over and I trade the London Open. Come on. You are a slave to the market. If you want to make money, you have to submit to the market. So this is the problem, see? And, you're talking to guys, I talk to men, the big boys, and, so the big boys can get killed too. Look at the sell-off here. So without regard to closings, because it's too much, I guess the older I get, the less I can tolerate. And I'm just trying to get my life to a simple kind of checklist. Okay, I see small bars here. What's the trade? The trade to me is, right now there is no trade because it's too volatile. So it's about sell limits here for the scalp back, sell limits here for the thing back, sell limits there, and buy limits down here. And because I'm not going to chase it, here was the entry. Trailing sell stops, if you have those running, you're risking this much. You just by nature. So this was an amazing entry. Buy stops stacking up. Now this is the other piece of news that came out. And here was the sell trap. So when they trapped those bears on that wick, wow. And you would have been long 4 contracts there, or 4 whatevers, because as it tightens up into a 10, 20, 30 pip range, you're looking to make 3 times that to the upside. Boom. The sellers came in there, and then they poked into that round handle twice. Amazing. So, as dumb as it gets, buy stops are stacking up. Whoosh. How many times right now? Here is where they trap you. These wicks are kind of big, but backup plan is sell stops in here. You make it back. So when it flags out, you'll take either side of that trade. Here, for instance, your parachute would have been, this is a reason why this could not be a sell stop here, because these bars are too big to run stops. They would have trapped you. Actually, that bar was small, but that was the next bar. I hope I'm not just going too quick and just being too ridiculous, but I guess I'm just trying to think like a robot would think here, as far as how it would execute. If I just told, hey, listen, buy the next high, like when we get to a pip zone that's below this amount, below 20 pips, start putting in buy stops, because my script has got a 20 pip stop. And if I had sell stops sitting in there, here we never got filled, and you're just like riding it out. Now you could also be just on a smaller time frame. If you go to the other time frame here, same thing is, here is a small bar, so they trapped you and they stopped you out. You don't have a place to put in a sell stop. Here maybe, but wow, you still got the buy stops running. So this trumps that. You're stopped out of that, but you picked up these 2. You should be in 2 units. You're long for the scalp. you could put a buy stop in here because it qualifies as a trend trade because it's a small bar, just like the buy stop here qualifies. Here you have sell stops running, stop and reverse, never get filled. Or maybe that's your protection. Here it's an amazing low risk entry from the sell side. Buy stops running, never filled. Just stupid trading. Trading is dumb. It's for dumb people, and if you're intelligent and you're watching this, I'm so sorry for you because I almost think I have half a brain, and that's why I've lost a tremendous amount of time and energy and money trying to say, well, look at this, look at that, when it really comes down to the stupidest thing you'll ever see in your life. Now, here is the 5-minute fractal entry, may be a little bit more like this, but I say no to this too, because if you're on the 5-minute chart, I say you should buy on the bars only, because if you did get in on this fractal here, this is a Williams fractal that would pop up if you ran it, double top, right? It's a trap. They trapped you. They raped you. You want to get in. If you're on the 5-minute chart, you're going to trade a lot more, and this is why I cleaned up on this trade, because there's never a higher high on this 5-minute. Just before the news, there's a pop and a stop out, and whoosh, 30 pips in about, I don't know, like first 40 seconds. And then we kind of dilly-dallied up here. You can't see it on the 5-minute, and then whoosh, crushed through. If you bought at the 50, they burned your face off. But if you submitted to the market's behavior, buy stops are trailing, first fill, first stop out, second fill, a little bit of profit possibly, then they just completely annihilate everybody that thinks we're going to go back up and do this. We only make it to here. Now, this is maybe too many pips per 5 minutes for you. You don't need an ATR thing to see that you're basically living in a 5-pip window here. Now, these Williams fractals here, buy stops. Not these Williams fractals, because you're looking at the last known range here. And you don't need a too much to look back to see that this is 20 pips. Do you want to be putting buy stops in here with protection here? Maybe not so much, because look what they do to people. But if you can see that coming, they trapped him here. Of course, really, they right. You got, if you had these guys pending, you got filled here. I'm sorry, you got stopped out here. But see how they just keep on taking it down. And this one, it would have been, had you gotten filled on a breakout of, well, I guess you would never get filled on those Williams fractals, but same thing if you said, I'm going to sell this Williams fractal on the bottom. Sell stop to continue. They trapped the bears there and ripped them. They also trapped the guy that says, we're just going to keep going down. This is a 5-minute chart, you know. This is the noisy chart. Oh, really? Okay, well, buy stops maybe on your Williams fractals here are stacking up. And finally, you get filled. Slight trap. You're stuck with your master stop here. If you get on this fractal, you have to put your stop there. There's no way around it. Then, boom, you're up. And then, here we go. And this thing, I watched this, and look at this cute little 5-minute. Now, I'm going to go to the 1-minute chart here. And this is going to be the revelation that pretty much sinks it in for me that you could trade the Williams fractal in the 1 minute. I must say, this is the only acceptable use of the Williams fractal entry. And I see these fractal trading guys, and I'm like, yeah, maybe not on the daily fractals, unless you want to take the hits that Stapleton takes, down 270 pips on a trade. Mind-blowing, right? Here's a triple top with your buy stop sitting here. Here's a nice, cute little fractal buy stop here. And you're going to pick up a flow, and you're running tight behind. Buy stop. Kind of late entry, but look, you're so right. And here is the cave-in, pullback, bam. So you could be running, and I've done it, and this is not even trading at the market. This is literally trading on trailing buy stops. Mind you, as the market's dropping, and these are quick moves. These are frighteningly quick. This is 10 pips in about 7 minutes here. Doesn't look like much on this chart. I think, let me go back here. As this thing's dropping, I'm literally pulling the buy stop trigger. Buy stop, buy stop, buy stop. Whoosh, get picked up. Totally made money on the scalp. The other option was to front run with buy limits here. Buy limits, now this is the reflective part. You got enough time to reflect on a chart like this to put in buy limits here and say, you know what? When they trap these guys and they don't go any lower than that, I'm going to gobble up on limits. So as it's coming down, not only are you loading up on buy limits, you got buy stops running. You're hopefully out of at least 50% of this position, waiting for the next entry fractal. Maybe you have a buy stop here, but ultimately, you don't want the buy stop here. Let the market pull back, let it pull back, and just ratchet in with buy stops here. Scalp that part, ratchet in, just kind of come in on this thing. 1 minute chart buy stops. Hey man, as soon as this thing goes in your favor, even a little bit, you get picked up. Now here was kind of a trap. You got chopped up there. You stuck with your program. You make it back. And are we in a downtrend or an uptrend? Holy crap. I mean, this is the 1 minute chart. Obviously you're in an uptrend because, and if Stapleton's watching my video, I'm sure he tunes in all the time after he stole that one concept from me, that this move here is swing high, swing low, is the Stapleton presentation of the trend here. The trend's up. And why is it up? Because this is the lowest low. It's like, swing low to swing high, come back, structurally lose, right? But you know this didn't take this out, so you've totally got the buy trigger set. Even here, you're still in an uptrend. You never violate this low. Let's look at the whole chart next time, people. Some people are going to get in here, and they're going to be right. I'm not getting in there, and I maybe get in here. But what I really want to do is get in here, get out here. When it takes this out, that's confirmation hold. It's not confirmation entry. And waiting for confirmation, why are you trading? Well, you're waiting for confirmation. You're not a trader. You're waiting for confirmation? You really are that afraid of the market? Obviously, it's fear. Why would you wait for confirmation? You do that for flights that you book to Europe. I'm waiting for confirmation. When you make a payment on your credit card, I'm waiting for confirmation. Here's your confirmation number, sir. Trading is not that. Forget confirmation. It's destiny is this is my creed, basically. It's a mistake to try to look too far ahead. The chain of destiny can only be grasped one link at a time, and grasped, when you say grasp, that's the execution part of the trade. So too far ahead, overproject and create fantasy targets and get yourself in a heap of trouble. And got to see the trap coming. Wait for the market to quiet down, trade like a girl, and make a ton of money. Wait till the wild beast simmers down. Now, simmer down now. And always be expecting the wild beast to run for the border, run for the edges. Get in on limits on the edges. Get in on stops when the market forms a flag or a triangle. Try to be bidirectional. So get in either way it breaks out. Be prepared for either outcome. With totally symmetrical, unbiased trading, sure, you can have a bias, but let the market prove you right. That's what Alexander Elder will tell you. Let the market prove you right. You think you're right about that trade? Place the orders and let the popcorn pop, because when the news comes out, that's where all the money's made. And they also said, this Akel Stokes says, as he's sitting there doing this first candid interview where he's not being like the trading show, and he says, you know what? We're not trading the news. No, we don't trade the news around here. I'm like, wow, that you're really taking some of the best fun out of trading. Not even on a demo? Really? Just to see if you can do it? Like, how bright do you have to be? Not too bright, man. And all the news stuff on here, completely, maybe there was slippage on your orders. Maybe trade smaller. But that's where all the money's at. Why not trade the news? I don't think you can trade the news from this. There is a problem. If you're this guy and you're trading the news, you may blow the account up, right? Decisive, you're a doer. And if you're impulsive and you get trapped in some of these moves that, man, when these are fake out moves, the market just spiked 100, now it just went down 100, then it just went up 50, and then it just went down 75, then it went up 10, then went up, that's, wow. But if you know your pip risk window entry, and you know what you can tolerate pip risk, and you have the order waiting, and you're like, okay, there's my entry. Market's quiet, getting in on stops or at the market with a tight stop. Anytime the market's calmed down, and maybe you're going to hedge it, complete hedge at the market. You could literally load up in a quiet flag and go either way. As long as your ratios are like risk 8 to make 4. I mean, risk 8 to make 30, risk 8 pips to make, risk 10 to make 50, risk 20 to make 100. I mean, the whole gamut, the whole spectrum of risk spread out in a reflective manner. Also, you can pre-reflect on the market. I suppose you have your market orders ready on deck that you've reflected about what you're willing to risk ahead of time. So there's also just risk reflection. Then there's market structure trading reflection. And just to finish off this thing, I want to go to the market structure story trade, which would be more reflective. And of course, you'd have to kind of put that in the drawer maybe. If you have your scalping hat that you're gonna put on and become the scalper, also have the big picture, as they say, going in your head. Here's the crash of the market, mechanical entry, and there's a couple other Wyckoff charts here just for what's really happening in the market here. And here's another way to look at it. If you're going to mechanical enter a analytical view, that spring there is your sell limits, and here you have your sell stops stacking up. But if you're aware of what's really going on here, this happens over and over again. The constant trap, rip back, comes back, finds its last known thing, and here's where the breakout traders just clean house. Even the guys that got in late on this fractal, but imagine you have the sell stop stacking up. You're already in here, and your confirmation is the fact that your confirmation exists in the fact that you are holding. You're in here on sell limits, but you're going to hold and say, you know what, I'm going to let that thing play out. I've already taken profits on some of this before we even got to here, because this could be support for a rally. So you're already out of the trade. And sure, you can move your stops break even. Here, I'm just like, forget about it, right? You could have stop and reverse. Let's go the other way. And so I'm going to the next panel here. The next, this is a bunch of Wyckoff stuff I found. And here's a crude line chart version, which just gives you the over and over again. And he doesn't mark it off here necessarily, but here's the old, resistance becomes support. Finally, you reach the flag. So, you're either putting the sell stops in there, or you've been getting in tighter on limits as you go up stops, but this happens all the time, and it's just about the time frame you're on. Bottom becomes a top, bottom becomes a top. Finally we get a new high. But the selling climaxes, low risk entries down here, buy low, sell high all day long. It's always like this. Never changes. Here's the most simplification. This is the most simplified view there ever was. Ever. Because accumulation markup, distribution markdown. And they also have another name for that part there. Again, more simplification. Here is, I need to blow this puppy up. Here's like an abbreviated preliminary supply. All these areas, but it's really about getting those orders in there. Here's a complex view for people that like complexity. And there's the creek, and you jump the creek, and that's the whole story. But this is schematic 1. Market phases. When you're in this accumulation phase, man, this is the trend trader's nightmare, all day long. Who isn't just completely going, we're going up. Could we just get there already? So that's a lot of stuff that I'm not going to have to deal with anymore. I'm going to go to this volatility breakout system, because down here, you would have got in. You already belong. And you're taking something out the table. Sure, you realize it's a pullback, but how are you going to get in? You're going to get in on these pullbacks. And buy stops, limits, don't overload the wagon. And maybe you're wrong, but you have your backup plan running behind you. Here's a with a moving average on it. Same story. But the inversion version of that. Here's the ice. You break through the ice, and there you go. Top becomes a bottom just before this thing leaves the station. Huge, giant pivot right there. And here is the they trap those, and we've seen this before. This quiet move, and then the excitement. There's a baby top and bottom just before that, and that's here's the top bottom, the baby subtle. Right? But you don't have to know this story. You can just be a pure mechanical entry guy. It really depends how much work, better to put the work into the order placement, I think, at this point, than it is to try to say, oh, it's going to this price by then, and look how smart I am. Now there's the flag, the reaccumulation. So sometimes there's the reaccumulation phase, but this guy wasn't an Elliottian. He had, I think he had more of a structure view than Elliott. Elliott is really about these trends, and it seems to me most the orientation on that. Where this looks easier to trade, Wyckoff, and I think Wyckoff might have been before. This got some interesting break the ice. That break the ice trade, that was the entry for limits. I like that break the ice. It's funny. But the cool thing here is the cause and the effect. I think that is the key thing. And if people want to know why the market does what it does, and this is the answer, if you're perplexed by stuff, like, well, the news, but they say, what is the market cause? And then here's the effect. So the cause is the accumulation, and the effect is when you see it marked up. And what you're seeing in the stock market right now is a retest. In the big picture, you had a rally up into this thing here. So there's a possible big sell-off coming in the stock market. Huge, because we've actually got a rally up into previous. It's pretty scary there in the stock market, so especially with these people that think. And this guy was talking about the another thing about that channel trading, that guy was short the British pound. He said to me, I said, aren't you worried about the breakout into new lows, the bear trap? And he said, well, He didn't actually answer that question. He came back with, well, they're going to raise interest rates and they're going to print more money in Europe and all this stuff. But we have to be aware of the fact that we may be in accumulation phase in the euro right now. And if this is happening at 107 on the euro, it's going to be retrace city. The other possibility is we're at this phase in a downtrend. So we're in, let me go to the next down chart. Yeah, I mean we're in this phase here. We're sideways. So if you think we're going down, the euro's in this thing here. It's trapped in this, and we're just going to, maybe it's more like we're in this. We would be in this place of the euro dollar right now. So this is what the story looks like: is that we're retesting. See, this is 107, and we've been in this kind of what you would suspect is accumulation phase. You get long here, and you stay long for the confirmation breakout. Hopefully, you're already in, and it never goes down. But if it does take this out. In fact, you could actually gap up in here after what happened in Europe. Who knows, right? All these immigrants, and here's the big wrench thrown into. So this is the cause. The effect is marked down. Here's the cause. There's the effect. It's not that necessarily the news. This distribution, this distribution, and then the markdown. And that's what, and here's the bottom becomes the top. Here's the trap. So he's got the trap listed here. That's the bull trap. Anyways, I hope that helps, and it's going to be interesting to see. Of course, this is just for entertainment purposes to see how the market is affected by news. I don't ever want to be a fundamental trader. This guy that was, he said the dollar index was going up, so this is fundamental stuff. The dollar index is going up, and people are looking to that, and this could be complete confirmation bias. People are justifying a position that they've taken. But in the end, for me, it's going to be about volatility, breakout entry, and exits, and limit entries on the cycle moves. Trading both directions. So, anyways, I hope that's of some value. I guess I kind of went on a little rode through a bunch of stuff there, but. I guess with the video thing, you can always, if I went too fast or didn't make sense there, you guys stop, reverse, and I'm waiting to hear back from Stapleton because he's busy. And then he said in his last video, it was kind of funny, a little pompous, I must say. He said, well, somebody wanted to sit next to me and trade, and if they had to do that, I'd have to charge them a lot of money. I'm like, God, you should have traded the news. Then you'd have enough money. You could sit down with somebody and just say, here, this is what it is. And they'd go off and tell other friends, oh, my God, you got to sign up with this guy. He knows his stuff. Anyways, that's what I'm thinking. And that's all I got. So thanks for tuning in. And I don't know. I wish I could help as many people as I could to, I guess, rethink what they think and start over from scratch. This would be the Ayn Rand creed, check your premise. Even though you're trading well and making money, you could maybe make more money trying a different, I guess it would take a little flexibility, but you can always run it on a demo account and test out some of these things and You might find that you're making money, not the way you want to, but the market's just giving you money. And that may be an awkward feeling because morally and ethically, we've been taught, work hard for your money, you got to have skin in the game, and all these things may not be a benefit in the world of trading, you know. And it's a complicated thing because we're not robots. So we're bringing all our expectations and all our analysis to this game. As you can see on this chart, this Wyckoff chart, piles of money if you trade this thing properly. So it's not like analysis doesn't work, but having the parachute, this is the only game where you make money jumping out of a perfectly good airplane with a parachute because the plane's going into the ground. So this would be the creed of any landing you can walk away from is a good landing. So any trade that you don't blow up your account on is a good trade. And you just have to basically be taking risk. And that's just how it is. So anyways, I hope it's going to be a good week of setups here. Interesting to see how far they push the euro down, or if this is it. What phase are we in right now?